Welcome back, students, to Accounting 2401, Principles of Financial Accounting. This is your instructor, Dr. Mercado, and I'm so excited that you're back. In this particular lecture, we are going to be covering Chapter 4, which deals with the accounting cycle. The specific problem being covered in this lecture is Exercise 413. Now, before I begin, I do want to ask all students, like every week, to please make sure that you read the chapter. A lot of information is included. Now, this particular chapter revolves around describing the flow of accounting information from the unadjusted trial balance into the adjusted trial balance and then preparing our financial statements. In Chapter 3, we learned about doing or preparing our adjusting entries. So we start off with our unadjusted trial balance. We process the adjustments, and then we have the adjusted trial balance, which is what we utilize to prepare our financial statements. So in this chapter, we are heavily going to cover the preparation of financial statements from the adjusted trial balance. Okay. In addition, we're going to be introduced to a new topic, which is the closing process. We're going to learn to journalize closing entries. This is done once a year. We have to clear out all of our temporary accounts, and then so we can start a brand new year. Okay, we are going to describe the accounting cycle, all of the different steps in the accounting in the accounting cycle, as well as illustrate how to complete the entire accounting cycle. Okay, a lot of information is included. It can be overwhelming. Take it a step at a time. Okay. Now, before I begin covering the problem, we just need to go over the 10 basic steps of the accounting cycle. Okay, we need to know not only the 10 steps, but we need to learn how to do each of the items in each of the steps. Okay, so it's very important. You are going to be having a comprehensive accounting cycle problem in the future. Putting all of the steps together, everything that has been covered from chapters 1 through 4 is critical. Okay, so the 10 steps in the accounting cycle include: transactions are analyzed and recorded in the journal. That's step number 1. Step number 2, transactions are posted to the ledger. So we transfer the information from our general journal to our general ledger. Step number 3, an unadjusted trial balance is prepared. Okay. Step number 4, adjustments data are assembled and analyzed. Okay. Step number 5, an optional end-of-period spreadsheet is prepared. Step number 6, adjusting entries are journalized and posted to the ledger. Okay. After adjustments have been recorded, an adjusted trial balance is prepared. Okay. With the information in the adjusted trial balance, then you can begin preparing your financial statements. Okay. So in step number 8, financial statements are prepared. Step number 9, closing entries are journalized and posted to the ledger. And then last but not least, a post-closing trial balance is prepared. Okay, so we've got 10 steps in the accounting cycle that have been covered from chapters 1 through 4. It is cumulative. Okay, so we need to know how to analyze transactions, how to post adjustments, how to prepare financial statements, how to prepare closing entries. Everything needs to happen. Okay, so the problem that we are going to be dealing with in this lecture, which is exercise 14, deals with the balance sheet. So my focus in this particular problem is going to be the balance sheet. Okay, so in the balance sheet, assets are divided into 2 sections. We have the current assets and PPE, which is property, plant, and equipment. Okay, so current assets are basically any assets that are expected to be converted to cash or sold or used up within 1 year or less. That is the key word, 1 year or less. So if you're going to convert to cash, sell, or use up in less than a year or a year, that is considered a current asset. Okay, and this is usually done through the normal operations of a business. Okay, let's, for example, supplies is an asset. You use up your supplies. You prepay your insurance, which is an asset. You use up your insurance. Okay, so those are your current assets. Okay. In addition to cash, current assets include notes receivable, accounts receivable, supplies, and other prepaid expenses. Okay. Now, under property, plant, and equipment section, that is where we include our fixed assets or plant assets. Okay. These include equipment, machinery, buildings, and land. Okay, so if it includes any of those categories, we need to put them into our property, plant, and equipment. Okay, so those are the two main sections in your assets section. I'm not going to read over everything. This is all in your book. Then we have the liability section in the balance sheet, which is basically any money that is owed to creditors. And once again, liabilities are divided into two sections. We have current liabilities and long-term liabilities. Okay, so current liabilities are due in a short period of time, usually within 1 year or less. So if you're going to pay those debts within 1 year or less, they're current liabilities. Okay, so these are your notes payable, your accounts payable, your wages payable, your interest payable, your taxes payable, unearned fees. Those are some examples of your current liabilities. Okay, remember, if you're going to pay those liabilities within a year or less, they're current. Then we have our long-term liabilities. Those are your liabilities that are not to be due in a short period of time. Rather, they're going to be due in a long time, in a longer time period, usually more than 1 year. Okay, so if it's going to take you longer than a year to pay your liabilities, then they're your long-term liabilities. Okay. So, for example, some examples of long-term liabilities are your mortgage notes payable or your mortgage payable. Or let's say you buy a piece of equipment, you get it financed through the bank, and you're going to pay it for the next 10 years, then that would be a long-term liability. Okay. And then last but not least, on your balance sheet, we have the stockholders' equity section. And the stockholders' equity section is basically the right to the assets of the business is presented on the balance sheet. Okay. And this basically consists of common stock and retained earnings. Okay, so these are the three sections that appear on your balance sheet, and that is what we're going to be focusing on this particular exercise. Okay, so this is the exercise that we have. Okay, so it says the following balance sheet was prepared by Labyrinth Services for its year ended August the 31st. Okay, so they're providing you with a balance sheet. Okay. So my total assets are 933,300. My total liabilities and stockholders' equity are 933,300. From what we can observe at a high level, my assets equal my liabilities and stockholders' equity, so we should be good. Okay? But no, we're not. The problem says that there's some errors on the balance sheet. We have to list the errors in the preceding balance sheet and then prepare a corrected balance sheet. Okay? So we have to list the errors and then prepare a corrected balance sheet. Okay, so let's look at the balance sheet. Okay, let me list the errors down here. Okay, so the name of the company is Labyrinth Services Company. This is the balance sheet. Now, the first error that I grasped from this information is the title of the date. It says for the year ended August the 31st. Okay. Balance sheets are for a point in time. We are preparing this balance sheet as of August the 31st. So the date and the statement should be August the 31st and not for the year ended. Okay, so let's write that down. So the date of the statement should be simply August the 31st. Oh my God, here we go. August the 31st and not for the year ended. Okay, so that is the first error that I can see here. Okay, we're going to start from the top and work our way to the bottom. Okay, so the first thing that that we identified was an error is the date. Okay, it should not read for the year ended. It should just read the August 31st date because we are doing it as of that point in time. Okay, now let's look at our assets. Okay, we have current assets. Okay, cash is all of these are our assets. Cash 18,500. Okay, cash is an asset. The normal balance of an asset is a debit. That is correct. Now let's look at the next item. accounts payable. Is accounts payable an asset? Okay, and by now we should know that if the word payable is in there, that means it's a liability. So accounts payable should not be in the asset section, in the current asset section. That should be as a current liability. So that's my second mistake. Accounts payable should not go under current assets. So let's put that up here. Okay, so accounts payable should be a current liability, not a current asset. Okay, so we're gonna have to fix this. Supplies, $6,500, that is correct. Okay, prepaid insurance, debit, that's correct. Land, $225,000. Okay, now what did we say about land? If we go back over here to our asset section under property, plant, and equipment, it says these assets include equipment, machinery, buildings, and land. So land is an asset, but it is not a current asset. It is a property, plant, and equipment. Okay, so it's in the wrong category. Okay, so land should not be as a current asset, but rather as property, plant, and equipment. Okay, so that's the third error that we're finding so far. Okay, land should be classified as property, plant, and equipment. Okay, so then we move forward. Under property, plant, and equipment, we've got a building of $400,000, equipment of $97,000, and then we have our total property, plant, and equipment. Okay, now we are missing some items here in this property, plant, and equipment section. Okay, so if you know, if we go refer back to the ebook or the textbook, it says that we should have an asset, and right below the asset we should have its corresponding accumulated depreciation. Okay, which is a contra asset account. So we should have the building, and then we should have below it how much of the building has been depreciated, so we can be able to calculate our book value. Okay, so, and then we would have equipment, and then below equipment we should have the accumulated depreciation for the equipment. Okay, so accumulated depreciation for these accounts is missing. So these accounts, accumulated depreciation, should be moved up to the property, plant, and equipment section. Okay, so these two accounts need to be moved up below their corresponding asset account. So the assets are correct, it's just that they're missing the accumulated depreciation. Okay, so that's the fourth error. Accumulated depreciation should be deducted from its related fixed asset under the property, plant, and equipment section of the balance sheet. Okay, so accumulated depreciation should be deducted from its related fixed assets under the PPE section, property, plant, and equipment section of the balance sheet. Okay, and then you can get your totals. Okay, now let's look at property, plant, and equipment. Okay, we have $400,000 and $97,000. Now, I am no math, whiz here, but 497,000 is not 635,400. Okay, so just to make sure, let me get my calculator out. 400,000 plus 97,000 gives me 497,000. What is my total property, plant, and equipment? 635,400. So they did the math incorrectly here. Okay, They didn't add correctly. Okay, so that is also an error. There's an adding error in determining the amount of total property, plant, and equipment. Okay, so that was just something that I could easily observe because the numbers don't make any sense. Okay, so an adding error. So basically what I'm telling you is don't trust someone else's work. Okay, if you're doing a review every single number, make sure that the math works out, everything. An adding error was made in determining the amount, the total amount of the total property, plant, and equipment. Okay, so that number is incorrect. Okay, this number right here is wrong. 497,000 do not give you that number. So they made a math error right there. Okay, so we keep on going. So then we have under current liabilities. Okay, remember, current liabilities are any liabilities, any debt that's going to be paid within a year or less. The first thing that we have under current liabilities is accounts receivable. So by now we should know that accounts receivable is an asset. Okay, so accounts receivable is an asset, not a liability. So that should be moved. Accounts receivable should be moved up to the current assets section of the balance sheet. Okay, so let's look at number 6. Accounts receivable should be under current assets, not current liabilities. So we need to change that. So accounts receivable should be under current assets, not current liabilities. Okay, so that's going to change. Okay. Then we have the accumulated depreciation. We already said we need to move them up to PPE. And then we have net income. Okay. Do we record net income in our liability section? Okay. Do we? Liabilities are anything that you owe. So no, net income should not be reported under the liability section. Net income should be reported on the income statement and the statement of stockholders' equity. Okay, so net income is also an error. Net income should not be reported here. Okay, let me write this down over here. Net income should be reported on the income statement and the statement of stockholders' equity, not the balance sheet. Okay? Not the balance sheet. Okay? So net income needs to disappear. Okay? If we continue down, then we have our stockholders' equity section. Okay? The first thing that we have under the stockholders' equity is wages payable. Let's look at that word payable. We've already said it. If it has the word payable, it's a liability. Accounts payable, wages payable, salaries payable. Anything of that nature should be a liability. Give me a second. Let me see. Okay, so wages payable should be under our liability section. So that needs to be corrected right here. Wages payable, that needs to be moved up. Okay, so that is an error there. Let's do that number 8. Okay. Wages payable should be a current liability. Okay. So that needs to be moved up. Okay. Oh, and I misspelled should. Okay. Wages payable should be a current liability. So wages payable needs to be moved up to my current liability. Okay. Then under stockholders equity, of course, we're going to have our common stock and our retained earnings, and everything else seems to be okay. Okay. So what has happened? We have identified 8 errors on this balance sheet alone. Okay. So the errors have been identified. We've listed them. Now the fun part begins. We need to prepare the corrected balance sheet. Okay. So I've already have the template set up over here. We're gonna go ahead and we're gonna prepare it using the information provided and taking into consideration the 8 different errors that were found. Okay. So the first thing we're gonna do is the first correction was the date. Okay. So we're just gonna put August 31st. 20Y3. Okay, that was the first error. Okay, now under assets, okay, we're gonna have current assets. Okay, under current assets, we have cash. Cash had no error. Okay, now we have 3 columns. Okay, why? Because we have some calculations that have to happen. Okay, if there's some calculations that need to occur, they're gonna be put in the first column. Okay. If the balance just needs to be carried over, we're going to put it into the second column. If when we get the total assets, the total liabilities, or the total equity, that's going to be put, the totals are put on the third column. Okay, so that's why we have 3 columns in this case. Okay, so cash is just 18,500. There's no adjustments to it. We're going to put that on the second column. Okay, and let me put commas because I like how it looks with commas. It's clearer. There we go. Okay, so cash 18,500. Okay, next we had accounts payable. That does not go on the balance sheet, so we're going to skip that. Next we have supplies. Okay, supplies had a balance of $6,500. Okay, but let's wait a minute. Before we put supplies, there was something else that had happened. Oh, yes. Okay. Let's remember that under my current liabilities, we have our accounts receivable. Okay. So we have our accounts receivable that we need to incorporate up here. So accounts receivable was put as a liability, and that should go under current assets. So let's bring up our accounts receivable. We're going to bring it over, and we had 41,400 in receivables. Okay, so we're going to bring that up because accounts receivable is a very liquid asset. Okay, we should be collecting our receivables within 30 days. So that's very liquid. Okay, and usually the asset accounts are ordered in based on liquidity. Okay, and then after that we're gonna have our supplies. Okay, supplies, and the amount of our supplies was $6,500. Okay, then we have prepaid insurance. That there was no problem there. Prepaid insurance. We have prepaid insurance of $16,600. Okay. And is that all we have? Yes, because land needs to be moved down to my property, plant, and equipment. So then those are my 4 current assets. So now I'm going to get total current assets. And we're going to add those 4 together. So I'm going to add those, and I'm going to bring that to the third column. That's where I'm going to put all my totals. So my total current assets are $83,000. Okay. The next section we have is property, plant, and equipment. Okay. So under property, plant, and equipment, okay, we need to put all of our long-term assets. Okay. Now, if you look over to your current assets section, remember we have the land. Land, according to our findings, land should be classified as property, plant, and equipment. So, for my property, plant, and equipment, land has the highest value of 200 and, well, no, we have land, and then we have what do we have? Building and equipment. Okay, but we're going to move land because land does not get depreciated. Okay, all of our other assets get depreciated, land does not. So land stays at its value, its original value. So we're going to start off with land because that one does not get depreciated. And the value of our land is $225,000. Okay, so we've already moved land from our current assets. We moved it down to our property, plant, and equipment. Okay, next we have building. Okay, building has a value of $400,000. Now for our building, we're going to have to calculate our book value per se for our building. So we have to do some kind of calculation, so we're going to put that in our first column. So building is $400,000, okay? Now below the building, we have to put the accumulated depreciation. Okay, for the building. And we need to bring that down from our liability section. Remember, accumulated depreciation should be moved up to property, plant, and equipment. So my accumulated depreciation for the building is $155,000, and that is going to be a contra asset, so that's going to be a deduction. Okay, this is how much basically the asset has lost value in our books because we've used up the building. Okay, now we can calculate the book value for the building. Okay, this is how much the building is worth in our books. Okay, that's the value of the building in our books. Okay, it doesn't necessarily mean it's the actual market value, but this is how much we have it in our valued in our books. Okay, so we've got 400,000 minus 155. That gives me a book value of the building of 245. Okay, so if you do the calculations go on the first row. On the second row, you have the total of that calculation, which is the 245. Okay, we're going to do the same thing for the equipment. Okay, so we have equipment. Equipment is in our books for 97,000. Okay, and then we're going to bring in the accumulated depreciation for the equipment. And the accumulated depreciation for the equipment is $25,000. So now I can calculate my book value for the equipment. Okay. So the book value for my equipment is the 97,000 minus my 25,000. So my book value for the equipment is 72,000. So now we can observe the actual values of our property, plant, and equipment. My land is valued at 225. My building is valued at 245, and my equipment is valued at $72,000. Okay. Now we can get our total property, plant, and equipment. And we're going to get the total of those three, 225 plus 245 plus 72. So my total property, plant, and equipment is $542,000. Okay, let me insert the cell there. Okay, let me do another one because we need a little bit of space. There we go. So now we have our total current assets and our total property, plant, and equipment. Now we have to get our total assets. Okay, and your total assets are the sum of those two. The sum of your total current assets and the sum of your total property, plant, and equipment. So we're going to add the 83,000 plus the 542,000, and that's going to give me $625,000. $625,000. Okay. So my total assets are 625. Okay. So we've already made the corrections. We've already moved everything as how it should be moved. And these things moved up a little, but here we go. Just because I added some columns, okay? But let me try to fix them real quick. Net income, wages payable, and then this one goes here. Accumulated depreciation. Net income was a mistake. My wages payable. What else was an error? Building equipment, accounts payable, prepaid land. What am I missing? Accounts receivable. Accounts receivable should not be here. Okay, so those are all of my errors. Okay, there we go. And then this was over here. There we go. Okay, so that got messed up because I added some columns. Okay, now we've taken care of our current asset section, our property, plant, and equipment. We've accounted for the different items that were identified as errors. Okay, so that has been taken care of. Now we're going to focus on our liabilities. Okay, now remember, for our liabilities, accounts receivable did not belong here. That needed to be moved up. We've already moved it up to our current asset section, so that will no longer belong there. Accumulated depreciation needed to be moved up to our property, plant, and equipment section. That has already been done. Okay, and net income did not belong there. Okay, remember, net income goes on your income statement. Okay, so what goes under our current liabilities? Okay, so we should have an item under current liabilities. These are the liabilities that we're going to pay within 1 year or less. Now, we had identified an accounts payable. That needs to be moved down to our liabilities section. Okay, so accounts payable needs to be moved down to our liabilities. So we're going to have accounts payable. And my accounts payable balance is $31,300. Okay. And then we also had down here under the stockholders equity section, we had wages payable. Remember, if it has the word payable, it's a liability. So wages payable needed to be moved up from your stockholders equity to your liability section. So let's do that. So we're going to have wages payable. And we have wages payable of $6,500. Okay. So we have two liabilities. Those are the only two liabilities we have. Usually we have our current liabilities and our long-term liabilities. In this case, we don't have any long-term liabilities. We only have these two. So we can just calculate our total liabilities. This is all we have, liabilities. We can add those two and get a total liabilities. I'm going to add them up. And here we go. We have total liabilities of $37,800. Okay. Now we move on to our stockholders equity section. Wages payable is gone. That was recorded under a liability. Okay. Then we have our common stock. Okay. So common stock, we have $75,000. Okay. That is provided to you there. And then we have our retained earnings. Okay, those are the two things that you should have under your stockholders equity. Retained earnings. And we have retained earnings of $512,200. And then that is going to give me my total stockholders equity. Oh, sorry. Total stockholders equity. Okay. So we're going to add those two. And let's see what we get. We get $587,200. Okay. So now we have our total liabilities and our total stockholders equity. Now we can calculate our total liabilities and stockholders equity. Okay. And then for us to do that, we would add those two amounts, the $37,800 plus the $587,200, and that will give me $625,000. Okay, so now as we can observe, our total assets, total liabilities, and stockholders' equity are in balance, and all of the accounts are correctly classified in the correct category. So we've used the data provided on the incorrect balance sheet. It's just that they had, when they prepared this balance sheet, they had posted accounts into the wrong sections. Okay, they had misclassified accounts. We went in there, we identified the errors, and we reclassified everything accordingly. And now we're able to prepare the corrected balance sheet, and it is in balance, so we are good to go. Okay, so the key here is first going through the balance sheet and figuring out what is incorrect. You list the items that are incorrect, and then when you're preparing your updated balance sheet, mark off the items as you're doing them. Okay, the date is wrong. I've already fixed the date. Okay, accounts payable should be a current liability, not a current asset. So that account needs to be moved down to my current liability section. Okay, land should be classified as property, plant, and equipment. So we move land from current assets, we move it down to property, plant, and equipment, so on and so forth. Okay, so you need to make sure that all of the items that you identified have been properly reallocated on the balance sheet to the correct category. Okay, so this is the completed balance sheet, free of errors. So it's very important that we know how to classify where do all of these accounts go in what section. Are they an asset? Are they a liability? Are they stockholders' equity? And of course also the normal balances of the accounts. Those will help you identify errors very quickly. So if you see accounts receivable having a credit balance, okay, you can say, well, accounts receivable is an asset. The normal balance should be a debit. And you can easily figure out, oh, they misclassified the balance. It should be a debit instead of a credit. Okay, so things of that nature need to come to you with practice. Okay, accounting is done or learned by practicing a lot. You can read all you want, until you do it multiple times, you're not going to understand. Okay, that is why I give students 2 tries on their homework. That way they get to practice twice these problems. And then at the end, once you complete your assignment, remember that the solutions are provided. The solutions are only provided to those students that completed the problems. If you skip a problem, the solutions to that problem will not be provided. You need to attempt each of the problems to be able to get the solutions. Okay? So I encourage all of you to use those 2 attempts, not only to earn extra points or more points. If you got a 65 on your first attempt and you get an 80 on the second, you'll always keep the highest grade. You'll practice if you take that second attempt. You'll earn more points if you perform better. And at the end of the day, remember, the problems in your test are coming straight off of your homework. I'm giving you these problems not to keep you busy, but so you can practice. Okay, because it's important that we practice, because you're going to be doing all of this in the workforce. Okay, so it's very important that you understand. Okay, and I've had students tell me, Miss, I work for a CPA firm, and well, the computer does everything for us. Well, that's wonderful. Yes, technology is amazing. But what use is it for a computer to do everything for you if you don't know what an asset is? If you don't know what a balance, how to prepare a balance sheet, what should go in the balance sheet? Sometimes computers make mistakes. We enter the information into the computer, and the computer just does its thing. So if we enter junk into the information, we misclassify information, we misclassify amounts or accounts, the system's going to output, trash. Okay? So we need to understand the logic behind what the computer is doing. Okay? In a lot of cases, sometimes computers don't work, or we have to make manual adjustments to something a computer does. We need to know how everything works, how to prepare financial statements manually, how to read financial statements. Everything is very important. So that is what we're trying to teach you here. Okay? So that is exercise 413. I hope this lecture has helped. If you have any questions or concerns, do not hesitate to contact me. Please refer to your course syllabus for my office hours for the semester. Reach out to me if I can be of any assistance. And I wish you the best of luck in completing your homework. Until next time, have a wonderful day.